The U.S. economy is sending mixed signals, raising concerns about the possibility of stagflation. Recent data reveals a concerning rise in the core consumer price index. This indicates that inflation remains stubbornly high. Simultaneously, unemployment applications have spiked. This suggests that the job market may be weakening. These combined factors point to a potential scenario where inflation persists while economic growth stagnates. The Federal Reserve faces a challenging dilemma. It must tame inflation without causing a severe economic downturn. The current situation differs from the stagflation experienced in the 1970s. However, the persistence of inflation above the Fed's 2% target is worrisome. The Federal Reserve's preferred inflation gauge, the Personal Consumption Expenditures Price Index, rose by 0.2% in June 2023. This marked the smallest monthly increase since November 2020. However, core inflation, which excludes volatile food and energy prices, remained elevated at 4.1% year over year. This indicates that underlying inflationary pressures persist. Adding to the complexity of the situation are geopolitical events that could exacerbate inflationary pressures. Conflicts in the Middle East, particularly the ongoing war between Israel and Hamas, threaten to disrupt global supply chains. The Middle East plays a crucial role in global energy markets. Any disruption to oil production or distribution could send shockwaves through the global economy. Higher oil prices would translate into increased transportation costs, further fueling inflation. This impact would be felt across various sectors, from manufacturing to consumer goods. Additionally, the Middle East is a significant food exporter. Disruptions to agricultural production or distribution in the region could lead to higher global food prices. This would disproportionately affect low-income households already struggling with rising living costs. The uncertainty surrounding the duration and intensity of these conflicts adds another layer of complexity for policymakers. The Federal Reserve must consider these global factors while making decisions about interest rates and monetary policy. The potential for these conflicts to escalate and further disrupt global trade and supply chains poses a significant risk to the economic outlook. The Federal Reserve is walking a tightrope. It must balance the need to control inflation with the risk of triggering a recession. The central bank has already raised interest rates aggressively over the past year. However, inflation remains stubbornly high. This raises questions about the effectiveness of further rate hikes. Raising interest rates further could slow down the economy, potentially leading to job losses and reduced consumer spending. This could tip the economy into a recession. On the other hand, failing to control inflation could erode consumer confidence and lead to a wage price spiral. This would be detrimental to long-term economic growth. The Federal Reserve must carefully assess the potential consequences of each policy option. It must consider the lagging effects of monetary policy. There is often a significant delay between the implementation of a policy change and its impact on the economy. This makes it challenging to fine-tune the response to evolving economic conditions. The outlook for the U.S. economy remains uncertain. While some economists believe that a soft landing is still possible, others are more pessimistic. They point to the risks of stagflation and the potential for global events to derail the recovery. Several factors could help the U.S. avoid a severe economic downturn. A strong labor market, pent-up consumer demand, and the eventual resolution of supply chain disruptions could all contribute to a more positive outlook. However, the path forward remains narrow, and the risks are significant. The Federal Reserve's ability to navigate these challenges will be crucial. Its success in controlling inflation without causing a recession will largely determine the economic trajectory in the coming months and years. The global geopolitical landscape adds another layer of complexity. Resolving conflicts and mitigating their economic impact will be essential for sustaining global growth.